Silver's going to move into a new reality. This selling at 50, I love it. It tells me the idiots are still there. They stick a nickel in front of a freight train, and yeah, they got, quote, overbought situation on a short-term basis, but they don't see the larger context. And it wouldn't shock me that when we finally go through 50, we have a situation where we close one, I'm talking futures now, December futures. They're 47 something right now. They were up to just below 50 today. When they go through 50, it wouldn't shock me, and I'm not predicting, I'm just saying this would be justice. You close one day out at 49, next morning you open $3 higher, limit up or something. Because, force majeure, something going on, one of the fundamentals kick into gear, and suddenly you don't give these guys a chance to stop out of their short position. They put on at 50, You nail them to the wall and see if they can get out. Anyway, it wouldn't shock me that that's the way it happens. So I love seeing the selling at 50 because it tells me the idiots are still there. Yeah, well, in the futures, we watch the front month contract. Now, I know spot is above the front month contract. And it got to 51 and dropped back under 50 slightly. So it made new highs. Futures did not. They stopped at 49.76, a couple cents below $50. So some guy said, I'm going to sell the nearby future just below 50 and risk a nickel. Okay, make a dime. Okay, well, they're getting a sell-off here. Fine. Okay, I think it's idiot selling. Our assessment technically is that silver is about to move, make a quantum leap to a new reality. It's not in a bull trend. It's in a total shift phase in its price zone that it's lived in for 50 years. 50 highs, basically 20 is sort of a low, and to just live there forever. Go to the Federal Reserve of St. Louis, Fred, and you can punch up charts like lead or zinc and go back in price history, and they'll have monthly close-only chart going back to the 1990s anyway. And you'll see that they lived in a zone for quite a few, decade and a half or so, both those base metals. And in 2006, very late that year, silver and gold were already in a bull trend at that point. These metals took off and tripled in value, base metals. And since then, yeah, they've come back down, but they've never come back down into that prior zone of reality. They live in a new zone of reality that is double or more on average for the last 10, 15 years of what it used to be back in the 1990s to 2000. Well, silver's still in that first range, okay? Where it was from the 1979-80 high, the 2011 high. Gold's above the 2011 high, copper's above the 2011 high, and silver's still contained here? Give me a break. Okay, we know the fundamentals. I don't try to keep up with them too intimately because that's not what we do. But the technicals argue to us that we're about to blast out of this range and not just have another nice leg up, but move into a price zone of new reality. I'm betting it's well over 100. It may be between 100 and 200. And I think a lot of that's going to occur in a handful of months, 5 to 6 months. We're waiting on one trigger. That's a spread relationship between gold and silver. And we run momentum studies of it as well. Now, everybody looks at the ratio, the 80-70 to 1 type thing. We do it a different way. We divide silver to gold, express it as a percent. And right now, silver is about 1.2% of the price of an ounce of gold. That's extremely low going back 50 years. It's been over 2% in 21 of the past 50 years. Silver has reached 2% of the price of gold. And some of those weren't even bull market years. Okay, so we're very submerged, but there is a very clear structure on the spread charts. When you plot the spread chart, silver versus gold, there is a pending triple top breakout at 1.31%. So we're not far below there. When we cross that level, the same thing happened to its spread versus gold in 1979 and in the fall of 2010. Just before silver went totally vertical, went from like 20-something bucks to 50, boom, all in a handful of months. The spread was the tell, and we're watching that. We think it's going to break through, and our momentum of the spread suggested even a lower level than that 1.31%, which is a prior double top. We'll break out before that, and when we do, when that spread breaks out, I'm putting the seatbelt on. I think silver is the place to be for the next 2 quarters. And the move could be enormous. And you look back and say, oh, now I understand why. Supply demand's been tight, et cetera, et cetera. Market has been an irrational level for too long compared to other metals, for example. that have done the same thing, had a tantrum and moved to a new reality. Anyway, that's my major comment. Yeah, that reality's been there for a while. We know that. Recent years where the supply demand is the way it is and demand increasing, supply is not, et cetera. And yet price hasn't responded in a real way. I mean, you think about dollar terms also. 1980, $50. In real dollar terms, where would it put us now? It's probably 250, okay? In the decay in the value of the US dollar, not relative to other currencies, but in real buying power. Even over since 2011, money supplies increased like 150%. Okay, has silver increased that much above the 2011 high? No. Okay, so there's all kinds of realities out there that we know exist. We scratch our heads and say, this is ridiculous. Okay, we do anyway. And we know when it changes, it could change in a way that is, well, we've seen it in many markets. We've been around long enough to see when a market gets overvalued for too long, it gets ridiculous. In hindsight, everybody calls it a bubble. Of course, when it was happening, nobody called it a bubble. Or a market gets suppressed for so long that people think, oh, that's a new reality. It's a piece of crap. We don't, who cares about silver anymore? And it suddenly says, I'm going to wake up. Markets make mistakes. Investors make mistakes in terms of allocation, proper pricing in relation to reality. These things happen. Markets aren't always rational. And I'm arguing that silver was irrational, especially for the last 10, 20 years. Of not ever coming up above this base range high that virtually every metal in the world has done. And not silver? Oh, okay. What for? And now it's moving with gold now because it's a monetary metal. But when silver engages on the fundamentals, like the graph we just saw, it'll have its own life. And I think it's going to move to a new reality. And again, if you do a dollar conversion, $200 is not irrational whatsoever. And sometimes when markets are too irrational one way, when they correct the other way, they overcorrect. Okay, you go way beyond what the new reality might be in silver. Maybe silver's going to live in $100 to $200 range for the next 10, 20 years.
There are times in markets when you can feel that something's about to break. Not in a chaotic way, but in a deeply structural way. Silver, right now, is sitting on that edge. And the funny part? You can already hear the skeptics clanking their nickels against the freight train. They're still trying to scalp quarters, while a generational repricing event barrels toward them. I look at these guys selling silver around $50. And honestly, I love it. Because that kind of short-term genius tells you everything you need to know about market psychology. When you see people still shorting into the biggest long-term breakout in half a century, you know the complacency is still alive. They're risking nickels to pick up pennies, right in front of a freight train that's about to hit full speed. And that's the essence of this setup. We're not talking about just another leg higher in a bull market. We're talking about silver stepping into a new reality, a price zone that makes the last 50 years look like ancient history. Let's rewind for context. For 5 decades, silver has lived inside the same price box, call it a 10 to 50 range, with 20 as a sleepy midpoint. Since the 1980 peak and the brief flash of 2011, it's been trapped there, like a coiled spring. Meanwhile, the world changed around it. Gold broke free of its 2011 high. Copper, nickel, and zinc all reset to higher trading zones. Even lead, yes, lead, tripled off its old base and never looked back. But silver? Silver's been the laggard, the forgotten cousin at the family reunion. That's not because it lacks fundamentals. Quite the opposite. It's because it's been too fundamental, too tied to the mechanics of the monetary system, too central to both industry and finance, and therefore too threatening when it starts to run. Now, what's happening technically is the mirror image of what happened before silver's 2 biggest historical explosions, 1979 to 1980 and 2010 to 2011. Both times, the key signal wasn't just price, it was the spread, the relationship between silver and gold. Here's how I look at it. Most people focus on the gold-silver ratio, 80 to 1, 70 to 1, that sort of thing. I don't. Instead, I divide silver into gold and express it as a percentage. That gives you a purer view of the relationship. Right now, silver's only about 1.2% of the price of gold. Historically, it's been above 2% in 21 of the last 50 years. And that includes plenty of years that weren't even bull markets. So, when you see silver this suppressed relative to gold, you're not looking at a normal market. You're looking at a market that's been asleep for too long. And here's the trigger. There's a triple top breakout on the horizon in that spread, sitting right around 1.31%. Once silver trades above that relative level, the spread goes vertical. That's exactly what happened in 1979, and again in 2010. When the ratio broke, silver went ballistic. I'm talking about $20 turning into $50 in just a few months. That kind of acceleration. This isn't theoretical. It's pattern recognition. It's market memory. And right now, the charts are whispering that it's about to happen again. So, what does that mean for price? Well, let's play with some numbers. Silver's still sitting under $50. Gold's around $4,000. Historically, the average gold-silver ratio is around 50-1. But in the kind of move we're setting up for, a momentum-driven revaluation, that ratio compresses dramatically. In 1980, it hit 15-1. In 2011, it dropped near 30-1. If gold just stays at $4,000 and silver goes back to a 30-1 ratio, that's $133 silver. If it goes to 20-1, that's $200. And those aren't moonshot numbers. Those are historically normal outcomes during monetary shifts. Now, you can argue fundamentals all day. Solar panels, electric vehicles, supply deficits. Those matter, sure. But what really drives the monster moves is when the monetary narrative flips. When the world stops seeing silver as just another commodity and starts seeing it as monetary truth. That's when the rocket ignites. Look, we all know the setup. Silver demand is at record levels. Global mine supply has been flat for years. The US Mint can't keep up with coin orders. Industrial consumption is accelerating, especially with solar expansion. China and India are hoarding physical silver, not ETFs. The Silver Institute itself admits there's been a structural deficit for multiple years running, roughly 250 to 300 million ounces short per year. That's not cyclical, that's systemic. Yet despite all this, price hasn't responded. It's almost comic. You have one of the most indispensable metals on Earth, essential for energy, defense, technology, and monetary history. And it's still priced like a forgotten relic. Markets do this. They get stuck in irrational zones for years. Then, when they finally move, they overcorrect, violently. Go back and look at lead and zinc in the early 2000s. They lived flat and lifeless for a decade. Then, in 2006, they suddenly tripled. Why? Because industrial cycles turned, investors woke up, and liquidity flooded in. After that, they never went back to the old range. That's exactly what's about to happen with silver. We're not just talking about a rally to 60 or 70. We're talking about a total revaluation of what silver is worth in a world where money is being debased daily. Let's face it, the dollar isn't real money anymore. It's a digit of faith, a liability of a bankrupt government. Every time the Fed manages the economy, what they're really managing is a controlled devaluation. Inflation, deficits, financial repression. It's all the same trick. Transfer wealth from savers to debtors. And silver is the anti-trick. It's the reset button. When I look at the charts, I see a 50-year consolidation that's about to end. I see a metal that's underperformed its peers for a generation. I see investors who have given up. And I love that, because apathy is the best fuel for breakouts. We're sitting at a point where any push, a geopolitical shock, a sudden supply squeeze, or a technical breakout above 50 could trigger a chain reaction. And when that happens, it's not going to give the shorts time to stop out. They're going to wake up one morning to a $3 gap higher, and by the time they hit the keyboard, it'll be $10 higher. That's how silver moves when it wakes up. It's not polite, it's not linear, it's violent, sudden, and unforgiving.